Alright, this one is for Joseph's request on Iron Condors with 0 DTEs. So let's just use a paper money account for the time being. And let's use one that has sort of high kind of liquidity, even though it's only 2 hours and 17 it's 2:17 p.m. Jeez, thank God it's Friday. And so we'll use sort of the data that we have right now. Typically, how I would be structuring my 0 DTE trade, usually I'll start off with the SPX just because it just has a better sort of liquidity to buying power requirement. But as you can see, there's not much premium in the puts and in the call side, with only an hour and some change left, right? So what does still have some liquidity left would be the NDX, and the NDX still has liquidity, even though it's much more expensive. But relative to sort of the position that you're trying to take, it ultimately really doesn't matter. So as long as you have the required buying power and you have your stop losses set for your Iron Condor, so you're gonna treat these like infinite loss potential strangles, but you're gonna close or you're gonna modify it to save yourself in order for you to not take a huge L when it comes to these types of trade. So let's just pretend that this is the SPX and that this is the liquidity that you're seeing. It's relatively rich, so SPX will really realistically be, especially at $20 wide Iron Condors. So if I try to do a $20 wide one right now, 1 2 1 2 for the short positions, and then $30 wide wings. These are in increments of 10, so right there, and this is increments of 5 right here, so you have to kind of pay attention to that. So this is 10 20, oh my god, my math, 10 20 30. Oh, it's okay. Right, because we're bullish right now. All right, whatever. Okay, so your Iron Condor looks like this, right? And your basically your break even is going to be down here. So let's just put a little alert right there. And then your break even up top is pretty much where the all-time highs are. So let's assume that you're in a situation where it's not going to reach its all-time highs again. It's already peaked, and then right now we're just going to grind lower towards that situation. I dig the position as like a kind of like a YOLO throw. So you have your $30 wide, $30 wide for your strangle. Your $20 wide, $20 wide, or in this case $30 wide because it's kind of shifting right now. And then you'll just execute it from that point on. So you collect your credit, and it functions very much like your normal Iron Condor, except the difference is that notice how the stock has barely moved, but the money is just raking in. Why? Because theta. We're basically only an hour and 40 minutes until closing, which ultimately works in your favor. So this is one of the reasons why 0 DTs are really lucrative, because on a day where the movements are slow, you milk so much premium or profit just simply from the fact that you have sort of time on your side. But let's go back to that exact trade, because what I didn't show was the buying power, and that's actually very crucial to observe when it comes to these types of trades, because you need to pay very close attention to what your buying power requirements are. So the buying power requirement is only $1,700, right? Simply because we have our stop losses set right here, and because it's an iron condor, we basically cap up our losses at $1,700, which isn't too bad. So for a $1,200 credit, I should have put this on my actual account because the odds are pretty good considering. We are sacrificing $1,700 in buying power as a result. Now, the only reason why it's a little tricky for 0DTE in this regard is because the wider the wings are for your buying your long wings, right? The wider the gap between these two, the larger the risk of the sort of like the max loss. However, you also notice that this short wings right here, they're really tight. I would, me personally, never ever just do like a $30 or $40 wide on NDX. But keep in mind, remember, we're simulating a SPX trade. So let's just try to look at what that would look like from an SPX standpoint. So from an SPX standpoint, if I did $20 wide, which is what Tasty Trade would sort of recommend right there. So boom. And then another 20 right here. Look at how low that premium is just for that call position. Since the call position premium is so low, I wouldn't even want to even bother with a trade like this. And that's sort of the reasons why you don't want to trade 0DTEs this late in the game. Typically you want to do it, you know, as early as you can, right off the bell. I usually do it at 10:30 so I can see what the trend is before I make my decision. So this is 25, 35, 45, 55. Okay, and then another $30 wide. And so collecting 130 premium, but look at the risk factor right here, 2,870. Now this risk factor, if you were to be putting this trade on for SPX, would be exactly the same in the morning. The difference is the premium right here, it would be a lot juicier. We're talking like at least, I'd say 500 to 600 bucks is where I would say that the premium would be if you were to execute this trade. Hence why the timing is important. So for $2,000 worth of risk on a $20 short wide wing SPX iron condor, look at how wide the strikes are. I mean, I have to use a day model just to show you. So right here we're talking that's a huge gap. That's pretty much before the gap down. That's pretty much right at open. And then for the upside, you're looking at even well past that. Let's just say right here. So the structure and the safety net of doing SPX is much better when you're doing obviously 20 wide iron condors with $30 wings right at the open. And in fact, if I had put that position out, it would have just touched the highs of the day, and then it would have a huge like upside kind of potential down here, and you would have been totally fine. That's why I do 1030, because look, this is open, right? I do 1030, and look at where we are at 1030. We're pretty close to where we are right now. So at 1030, I could have executed this exact same trade and probably collected another $400 for this exact, maybe even more. I actually don't know what the buying, I mean the premium would have been right at open, and I can't reverse time on paper trade. So that's why I let the market make its initial move. If it starts grinding sideways by 1030, that's my sign. Aha, okay, we may grind sideways, or the moves aren't as dramatic. Therefore, from 1030 on, set my iron condor, and look, by the time that we're here, it would have been huge profits. It would have just been like, ugh, like they would have been probably well over 80% in the money, and I would have just closed the position and then just walk away. I would probably not even bother letting it close to the end of the day, even though that's what I used to do in the past. But because I would take that for granted, I've been burned in the past by doing so. So that's an SPX trade on, from this time point today, right? And then look, even when you look at it from a standpoint with like a 5-minute candle, those strike prices are so far out of the range, and SPX moves pretty slowly, even if there's a wild move. So it gives you that time decay to be able to just sort of walk that trade away. And with the NDX, it's similar, but look how tight that range is. You're gonna profit more, but the risk is also higher, ironically, right? But look how tight the range was. Is that the profitability to risk is much greater as a result. So you just have to be more precise with your calculations and your risk assumption. Simultaneously know that maybe just cut your losses once you hit a certain threshold. So these days, if I don't have time to just sit there and watch it, if I hit $100 in terms of profitability, I'll just take it and then walk away. Sometimes I'll use a percentage. I'll be like, maybe I can get away with 20% of the position and then just walk away. But the point of the fact that you're treating zero DTEs it is 100% day trading, so don't get me wrong. So that means that even if you assume there's a trend that you're following, shit can happen very quickly. Things can change like in an instant, and that always happens. And especially as we get towards power hour, we're only a half an hour away to power hour. So I would say that this current trend right here has about maybe 15 minutes left before it really starts to pick a direction. And then when it starts to pick a direction, you better be on the right side of it. But if you're doing an iron condor and strictly an iron condor, you're here for no direction. You're here for just sideways chop. And in this circumstance right now, if you had put this position in from the get-go, from the morning of, this would have been easily probably like maybe like a 3K, 4K winner. Just from having that assumption, having that feeling. So if we look at a 3-day, if you had made the assumption, this is market open. Let's just look at just the day. Market open here, same thing with the SPX, right? By 10:30, you're like, oh, okay. Looks like this is sort of where we're at. You set your iron condor right here, and then boom, look at that. It's like textbook, well in the range, and you just milk the theta decay. Yeah, but just in the few minutes that I've just been talking to you and showing the actual position itself, look, I could just close this for $100 easy, because why? There's very little volume and buying action and price action to actually move the stock one way or another. We were slowly grinding up, now we're slowly grinding down, and then you just take advantage of just the time that has transpired, and in just 5 minutes time, you take advantage of sort of the movement there. And what was the buying power risk? It was $1,700. Not freaking bad, but that's a tight window and a tight range. And look, we're getting more volume showing up, so I would actually close. Like you see the RSI, it's starting to build up. There's momentum, a squeeze happening right now. I would want to exit out of this position as quickly as possible to lock in profits, just simply because that, again, you have to watch something like that. And look, I already lost $15 just from that. $30. Oh no, then we're back into profitability. See, you gotta, it's like a, what's it called? It's a very wild animal. NDX, not recommended for beginners. SPX, right? Same scenario. We're getting momentum. You're gonna expect they move relatively similar enough, but I'm still profitable. I don't and I didn't have to rush as much, and I can just simply close the position right then and there. So what is the sort of the takeaway from me doing this like really quick right off the bat, just showing you what the Iron Condor can do, is that you need to understand your theta. You know, I'm really good at sort of like gauging my theta, but at the end of the day, price action is can just wipe you out. You could have been right the entire day. The market isn't moving, and in the last 15 minutes where we've seen this, or the last hour, it just explodes or decays in one direction, like a rabid animal. And so just me talking just made me lose like that $10 profit. So go ahead and try to close it for just a scratch at the very least. And look, we're not in the profitable zone. However, if this slows down, you can, break even or make a profit just simply because time is going by. And if the buyers or sellers are not making moves really quickly, you're going to make up the loss in your stock price with time decay. So you just seen it right then and there. I actually just like had the direction move against me, and then simultaneously the profits are coming back just because it's just basing out. It's just sitting there. It's not doing anything as a result. The P&L is what, 115 right now. Buying power used was, well, in this case, this one was the big buying power usage for very little gain. So I would rather not care about profitability on this position relative to the risk. So that's why I like using trading NDX, just because I can make the moves quick and I can get out quick, but you have to make sure that you pay attention to that. Let's see here. Oopsies. I have 2 Iron Condor trades on here. Cancel that. Cancel that. Okay, so position still moving against me. You can see all this red candles is just building up right there. And I'm just going to close this for $10. Now, SPX also has the problem of having lower liquidity. So you may be profitable right now, but because you are in SPX, there's less volume. So the volume is quite a bit, but Iron Condors are really tough to close in terms of positions. So you may have to close this position in 2 parts in order for it to move faster, because Iron Condors are selling both the positive and the negative, and if the stock is moving in just one direction, you may not have buyers on the other end to close that position. Hence why we've been sitting here trying to close this. The other problem with SPX is that you need to sell or buy in $5 increments, meaning that I could only have sold that for 115 or 120 or 110. There is no in between. So since there's a lot of price action, right, single dollar movements either direction, it doesn't help you close positions quickly with SPX. So when you set your SPX trades in the morning, right, or at 10:30, if you want to follow what I do, this is not financial advice. You just need to probably set a stop loss and then set a profit taking, at a specific time, a specific percentage, right? Usually 25%, 30%, or less or more depending on your risk appetite. But then you also have to know that the dollar amount in which you sell has to be exact. So if I'm looking for a $30 or $25 profit, I have to basically sell at that valuation. So let's say I'm okay with getting rid of it at 120, just because I want it to close. So I'm gonna eat a what's it called? I'm gonna eat a $5 loss just to close this position because I need to get out of it, not because it isn't worth, right, valuation wise, the extra $5, because net, your P&L open is $25, but I need to get, I need to sacrifice $5 to make it appetizing for both sides to be able to close the position. Or, like I said before, you can close one side of the trade. So if you think that if we're going bearish, then you can just close the call side basically, and then if we're trending that way, and then hope for a bounce to sell the put on the other end of the spectrum. So it all depends. In this case, I'll just try to close the entire iron condor and then take an L. So do it at 125, and then hopefully it closes. But this is also the trading sim, so I don't even know how they fill. Like that, it's also kind of the weird thing too. I noticed that it's harder to fill on the sim, the paper money trading account, than it is to do so on a normal live account, just because of the weirdness of everything. So take that for a grain of salt. But yeah, if you have any questions, feel free to reach out to me. I'll catch you on the next one.